The latest IPO in the health and wellness sector will answer the question, could Peloton face some serious competition? With flagging sales, they are going up against a company that has been around since 1975. iFit, the maker of NordicTrack and a collection of other brands, is going public and aiming to be valued at nearly $7 billion. In today's video, we break down the bull and the bear case for the equity and talk about their very impressive sales and marketing efficiency rate.
I'm Hannah, this is Aaron, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. That is longer than I've been alive. Make sure you stick around until later in the video, just before the bull and the bear case, to hear about how JetStore can help you with your data storage and cloud management.
Fitness, health, wellness.
Woo!
If those are the sectors that make you salivate, then this just might be the IPO for you.
Man, am I buzzing.
iFit, otherwise known as Icon Fitness, a roll-up of a multitude of companies, most famously NordicTrack, but also ProForm and Freemotion, is going public, aiming for a $6.6 billion valuation in raising $600 million from the public markets and earning an enterprise value to revenue ratio of 3.4. 3.4 enterprise value to revenue. This is commonly people say, what was the multiple that company is built on? It is often a multiple of revenue to enterprise value, and we will be coming back to it later in the video. What is iFit? We already talked about some of the brands. They've been around since 1975. That was the intonation of their oldest brands. They sell all sorts of fitness equipment, Hannah. Okay. Treadmills, ellipticals, bikes, rowers, climbers, yoga equipment. What more could you want?
I really couldn't name anything else that I would want more.
They make a less expensive bike than Peloton. Very important because we will be coming to that later. They also, in conjunction with the physical hardware, sell a software product where you can get access to a multitude of workouts, track your performance as an exerciser, and their family plan costs $39 a month.
Ooh!
Competitive with Peloton. Their investors have pumped more than $225 million into the company, the biggest of which we've covered in a past rundown way back in the day. L. Catterton, the private investing venture arm of Bernard Arnault,
the Wolf and Cashmere
business empire, one of the wealthiest men on the planet. Most recently, he pumped $200 million at a $7 billion valuation in October of 2020. So this is a valuation just south of that valuation there. So they're going in a little hot and heavy. The other side of the enterprise value to revenue ratio is the revenue numbers. Financial years end at the mid-year. So the May 13, 2019 fiscal year ended at $699 million. 2020, $851 million, and $1.7 billion for their financial year ending at the end of May 2021. So that 1.7 is really the pandemic year when everyone was stuck at home primarily. Over 104% growth in just 1 year for a company that has its roots all the way back to 1975. Damn. They made a bunch of money in the 2019 fiscal year, $56 million worth of profit, lost $98 million in 2020, lost $516 million in 2021. However, their subscription revenue is growing precipitously. So in 2019, 73 million of that 699 subs, 123 million in 2020, and 229 million in 2021. The reason that's important is because Peloton, one of their competitors, has exponentially higher enterprise value to revenue valuation metrics, and that is because, similar to a multitude of other companies, when you are evaluated through the lens of recurring subscriptions, beauty of a B2B SaaS revenue, we always talk about it on the show, you get a more generous valuation from public markets than if you are just a purveyor of hardware, which is what most of this company's history has been about, but more recently they have made a pivot. An important point here, that is really going to be one of the bending points of your bull and your bear case is a 1.4 times sales and marketing efficiency rate. What that means is for every dollar spent in the sales and marketing department, how many dollars come back in revenue that same year? $1.40 every time they put a dollar into the sales and marketing machine. That is always something that makes a potential investor salivate, because it says, I could keep giving you dollars and you'll keep turning them into more than $1. That's the whole premise of investing.
Oh yeah.
So if you have the capacity to do that, it's very enticing, but, and this is a big old but that you could work off on a NordicTrack. If that sales and marketing ratio, efficiency ratio, is over elevated because of the pandemic, and that is not a persistent feature of this company, then there will be drastically different trajectories of growth in the future.
Damn, so let's hear about the comps. In order to better understand any company that you are looking to invest in, it is helpful to get a feel for comparable companies and their competitors. Aaron, tell us about the comps.
3 juicy buckets worth of comps for you here today. The first is other fitness IPOs that have happened in the last calendar year. F45, we've covered on the show, has a $1.3 billion market cap, and Exponential Fitness has a $605 million market cap, less than half of F45. I was kind of surprised to see that. However, the big daddy, the Mac daddy, the kahuna, the one by which any investor in this sector that wants to specifically try and pick an individual winner and not just play the entire space generally, will be comparing iFit to is Peloton and their I'll say it again, $26 billion market cap. Now maybe we can get that number back again, the enterprise value to revenue ratio. Peloton has a 6.24 enterprise value to revenue ratio. They did $1.4 billion worth of revenue in 2020 as compared to the 1.7. Slightly different fiscal year for iFit, but just from a comparison's sake. They are getting a considerably juicier multiple on their revenue by public markets because of the market's belief in their capacity to use subscriptions to not only drive retention of customer dollars, loyalty, but potentially even upgrades in the form of other content packages and future product sales down the line. This is the horse that iFit will be matched up directly next to. I see numbers that are similar from a revenue standpoint, a wider, more developed arrangement of potential products, but none of the new sexy glitter of a brand new brand on a jaw-dropping vertical trajectory. In the last bucket, we're going to put 2 other companies. These are these are not competitors necessarily, but they will be indicative of how a company might be perceived by an investor and be highly dependent on the story that they can tell. Number 1 is a company called Weider that we've also covered in past episodes on this show, a legacy grill maker that went public up against Traeger, a new upstart company, and was able to point to its long track record, the deep brand equity, the familiarity that many people have with its brand as the potentiality for future sales and opportunities to investors. And then also Apple, because many people don't realize Apple has significantly grown their services revenue across app stores and Apple Music and Apple TV and become much more than just a hardware sales company. I'm not saying in any way, shape, or form that iFit could ever compete with Apple, although they do with the iPhone, iPod, iRoots.
Might play into the meme factor in a few minutes.
A little bit of meme factor there. But that is the story that the executives at iFit are attempting to guide the company towards and tell the public markets, and you will have to be the judge as to whether or not you're buying it.
You be the judge. Well, we just teased it. On to the meme factor. If you're unfamiliar with the meme factor, it's where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being negative memes, 3 being completely neutral, you feel absolutely nothing when you think of this company. And 5
leaves you dead inside.
Leaves you dead inside, exactly. And 5 is hella memes, dank memes, all of the memes. My meme factor score for iFit is, I'm going 4.2 on this one. Pretty high, but I think the name is strong. I think the industry overall in general is strong. You get all of this shit about like the working out from home and the getting swole and the yoked bros. And it just, I think that anything in the fitness wellness space has high potentiality for memes. So I'm going 4.2.
I'm going 3.3. I think that the NordicTrack, like the Versa climber or the elliptical.
But see, even you just doing that's a meme.
It's common, but I am picturing dads in sweatsuits. And whereas Peloton, I'm picturing someone in like some tight, overexposed outfit. It's sexy. Beyonce's blaring. Like I watched the TikTok memes of like the different trainers and like the weird stuff that they say there. I've never seen anything remotely like that for NordicTrack. And the meme people are already on one of the competitors. So to me, this is like being the second electric car company after Tesla. Like there's already someone on the meme corner here. So I'm giving it only a 3.3.
Wow. Well, you decide what your meme factor score is and leave it in the comments. Before we get to the bull and the bear case, let's hear about our sponsor, JetStore, one more time. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and even flight simulations. They can help you with so much stuff regarding your data storage. Check them out at jetstore.com. Thank you so much for sponsoring the rundown. On to the bull and the bear case.
Bull case is multifaceted. You have a lot of personal decisions to make as to whether or not you're landing on this specific lily pad. The macro factor, forget Peloton for a second. Are we going back to a world where most people work out in a gym, or is at-home fitness here to stay? Once you buy that piece of equipment, it's harder to justify the subscription to the in-person experience.
Definitely.
Although some people go there for other reasons: the community, the classes, the wide array of potential machinery that they can use. But if it's sitting in there, you got the sunk cost fallacy working against you, and that leads to potentially a shift in how and where people tend to exercise, catalyzed by the pandemic. Similarly, subscription revenue. We always talk about B2B SaaS on this show because it is one of the most salivating, salacious, delectable business models.
Makes my business brain absolutely throb.
This ain't quite that. However, the capacity to retain loyal customers via a subscription is one of the most attractive model for any public market company. We've talked about with Spotify, Netflix, Duolingo, on and on down the line. Consumer subscriptions, when able to retain users, are one of the best business models there is, because there's a whole lot of consumers out in the world, and if you get a big slice of them paying you regularly, you're doing all right.
You're doing all right.
And then finally, the sales and marketing upside. If that 1.4x sales and marketing efficiency rate is going to hold, then you have a company with established brand equity from the fact that it has been around for a very long time and is something of a trusted brand, paired with the upside of a sales and marketing investment that just raised $600 million, and it starts to look like there's a steep trajectory in front of you. On the bear side, I think that there's a real question as to the longevity of this brand. I think about it as driving past the fitness equipment store on the main street where I grew up and looking in and seeing those things. I don't think about it when I think about scrolling through the modern day main street of Instagram or TikTok or one of these other platforms. Peloton definitely occupies that. Peloton definitely shows up in the podcast that I listen to. No one is excited to share, man, just absolutely busted down on one of those ellipticals. No people are posting that.
No, that's fair. Definitely fair. Man, exciting stuff from iFit. Let us know your thoughts on this IPO. Thank you for watching the rundown. We would like to shout out one of our commenters from a previous video. On our Freshworks IPO video, Al Chen said, "Very good analysis, well done, really enjoyed."
Thanks, Al Chen.
Thank you.
And thank you to all of our subscribers. If you're not subscribed yet, what are you doing?
What are you doing? Thanks for watching the rundown.